Good morning, ladies and gentlemen. This is Clueless A Trading, and it's a very quick videocast, pre-market AM broadcast at around 8:54 a.m. New York Standard Time. I'm losing track of dates here. I believe today is Wednesday the 15th, which also coincides with an extremely important Fed rate announcement meeting in where the outlook of the Fed primarily is going to be what markets are going to be focusing on, not necessarily whether a rate hike is coming. I doubt if they're going to raise rates today, and if they do, expect a 300-point fall in the market and then a rise. Okay, that's just the way it goes. Now, we have had some tremendous successes over the past couple of weeks, over the past couple of months, and most recently, as 24 hours ago, on LinkedIn, where a strategic focused Clueless A Trading members who have been tracking my LinkedIn trades and charts from the lows to entering the gap fill and all that stuff. And kept some sort of long position in, were rewarded handsomely. So that's just what can I say? And the ones who are not, uh, unfortunately, they are just screaming in regret because that was just a humongous trade. I wish I owned 100,000 shares of LinkedIn, but hey, life doesn't work like that. But even a small amount was a significant return on the money in thousands of percents on the weekly options. So saying all that, let's start. Let's give a quick snapshot. What you see in the background is obviously the real-time E-minis in action. Like I say, the actors behind the kabuki theater that we know as the financial markets in the front, on the front end, and what we are witnessing now is a confluence of real risk factors. Brexit referendum. You have a situation with which is a serious situation with bonds yields going negative. The German Bund, which is basically their treasury bond, their 30-year treasury, and these things are not good because they have major technical ramifications in the market as bond prices rally, bond yields fall. So if there are major fund managers, for example, who are allocating and doing all kinds of arbitrage strategies or setting their fixed income portfolios, they gotta scramble. You get large institutional margin calls, which are swept underneath the markets, and every time the market tries to make a small move, especially during a rapid sell-off, as we have noticed, you start to see sellers come in, and these are not sellers like you and me. You're talking about institutional margin sellers, where each block of stock could be $10 million worth of Amazon being sold. So whatever the case, what I do here, and I've done successfully over the years, most of the time very successfully, I would say, and I can't time the market on a 5-minute basis, even though I do sometimes, is the fact that we look to see what technical, situations are developing as in oversold, overbought conditions. So the two things I'm going to concentrate on right now is, without getting, we have a shorter time here, but still, is basically, you see, let's start at volume. Okay, this is the E-minis on a daily basis. So you had this rapid, let me make this bigger. So you had this 1, 2, 3, 4, and then a reversal candle yesterday, which has to be respected for a short while here, possibly till about 2080, 2088 S&P 500. I mentioned that before a few times. My static charts are basically just, static versions of my videocast that you're listening to. So it's highly important that you look at those and listen to these, and your brains will put it together, and 2 plus 2 will, equal 4.3. At least you're getting close, right? So, like I say, the markets are linear, and 2 plus 2 doesn't equal 4. Okay, these are the realities of what happens. But what I look to see is really the internals, and I try to show people the basic internals, because I look at a lot of complicated charts that I don't want to bore people with, because there are very few wonks, as they say, who really want to really get into the nitty gritty of how markets work and what the severe technicals are and such. It's like driving a fantastic car. If you're going to drive a Lamborghini, Aventador, you'd really honestly, let's say you can afford one, and you own that. You don't want to be a Lamborghini mechanic, right? So my job is to be the mechanic. My job is, and your job is to basically study it. So when you're driving the car and there's something little happens, and maybe there's a noise of the crankshaft or whatever on the gear lever, at least you don't panic. You understand what's going on, and you can look under the hood quickly and say, okay, I'll survive. So my job is to keep people calm, put technicals in place, show some basic tools that people can use very effectively. And people who have sat with me and taken the advanced coaching sessions, which are critical to navigating and understanding these markets, are faring much better, let's put it this way, than most others who are just kind of flailing around. So I highly suggest that sign up for the advanced coaching sessions. Summer weekends get sometimes tight, but I tend to I strive to do it on Saturday and Sundays, and I'm open to working with people. But I need a lot more sign-ups so that we can do it as a group and everyone can get those tools and run with it. Saying all that, first thing here, let me show you the volume. This is what I call capitulation volume, acceleration volume. Once you get capitulation volume like that, you get a relief rally. Now, it's also called the dead cat bounce, but those are just, cliches that retail traders and the media uses. It's a technical move. The shorts cover, the longs get a little bit of a break, and you get this type of technical move here. Now, that's capitulation volume, okay? Seeing the green candle developing right now. And this is what I see on a daily basis, and I've shown this repeatedly on my charts. We got severely oversold. Okay, once you get down to these levels, once you get down to these levels, you tend to get a powerful reflex rebound. My strength is that I show you pretty much give or take a couple of points where those reflex bounds are. So your job is to manage your trades. You can't be looking at this market saying, "Oh, we're bouncing, we're going to go back to the highs." That's dumb talk. Okay, that's what a lot of people on Stock Twits, a lot of people in other forums, they're like, "Oh yeah, market's on the bounce, we're going to go back to the highs." That's garbage. Okay, we could hit 2080, 2085, 2090, and sell off so hard, and a red candle appear from nowhere. Okay. But my job is to basically keep you posted through the algo HFT charts, the algorithmic high frequency trading charts that I use through the quad platform to show you that. Now, I'm not going to give you a tick by tick every 10 minutes because that doesn't make any sense and your head's going to spin. It spins anyway, but I'll at least try to show you, what levels I see. So once you get to these levels, you get some sort of bounce. Now, the bounce can move up towards the 80 level. It can stall at the 60 level here on the stochastics, which are basically derivative of the RSI. And it can go here and come and create a double bottom, and then move from there, or it can move up and head towards 80. And this time, for example, it went up and created a tradable top. That means the market pulled back, and that was it didn't go. It went to about 70. So I watched this very carefully, right? Overbought conditions are over 80, and somewhere in the middle, things start to get a little bit jittery. Now, the other thing that I look for is basically the McClellan oscillator. Now, this is a very important indicator. Now, I've been showing this since yesterday. It's imperative, and it's mandatory that every trader go take a look at the charts that I've been putting through in the McClellan oscillator. I like to see McClellan oscillators at deep oversold levels of 200 or less. We never got there. We got to minus 172, 175, around there. It's nice to see that minus 200 because that's where you see the whites of the eyes, okay, of retail traders. And if you get to minus 300, you buy hands down. You will almost a 90% probability get a sharp tradable bounce. So fine for now. We hit a bottom here, and then we rallied nicely from this level, which was the 2020 level, all the way up to 2070. That was a nice rally, all the way up to almost 2100, off the McClellan bouncing off minus 172 or so. Or in this case, it was closer to minus 200, actually. Whatever the case, the McClellans are deeply oversold. And once you see the McClellan oscillators get up to these levels, the market's getting severely overbought. So it's a very simple way of looking at things. You can transpose that on your Thinkorswim charts, and you can move from there. Okay, so that's number one. So a reflex bounce is likely, and again, you will see intraday volatility. So you can jump on every tick, but at least I think this reflex bounce carries through Friday. Now, why do I say Friday? I say Friday, which I've mentioned many, many times, and a lot of my members know that, is because it's monthly options expiration. monthly options expiration generally is a bullish event. Now, it doesn't mean it's going to kick off today and then finish on Friday. You'll get chopped along the way. But Friday, generally speaking, should be up day, and that's something powerful. So if you have these little, if you want to keep things close to the vest, and remember, Brexit is June 23rd, all the stuff, the market's going to be jittery again. But if you want to play the short-term rally, you want to keep your options close to the vest and not pay up way too much premium for down the road, because we could get a big Brexit sell-off before we pick up. So what's the point of paying so much for options 2-3 weeks out when there's such a major event along the way, right? So it just makes logical sense to keep your options cheap. Yeah, you can play the Friday ones. You can play possibly next week's Wednesday's one if you're playing the indices. And so just keep them where you're not paying up too much. And if you go down and lose some money, you're not going to lose too much, right? Now, this is a 1-hour chart, which is important. On the 1-hour basis, we got overbought at 2 a.m. this morning, when the S&P futures hit 2073, right? Right now, it is. One second. Sorry. Okay. So here is 2020, very critical level. Now remember, you got to match this with all the tactical charts that I put out there over the past couple of days. Okay. So so here we have, I'll show you this. Generally, markets have a tendency, and I've done this because I've back tested charts going back years and years. I've been trading in the market since about 1998, right before the Asian flu. That was another major crisis. But as a professional trader over the past 6 to 8 years, so I've seen quite a few market cycles. Let's just put it this way. And one of the things I've done backtesting is basically what technical basis markets like to test breakout levels. Now, if you look at it this way, this is this breakout level. It was I think I put that. I actually did put that in a chart. I believe it was May 21st. Was an important one. It just took off, and the markets just basically, started to climb. You had a consolidation phase here, fooled everybody, and then took off again. So now, if you look at pattern symmetry, we came here, we dilly-dallied around, we fell. So this is one level of support right here. The second level of support comes in at about 2040, so I showed the chart here yesterday that this support should hold for now. And the maximum bounce I'm looking at is in the low 2080. So let's call it 2083. Comes to about 2090 on the S&P 500. Remember, you add 6 or 7 points or let's say 6 points to the E-minis to arrive at the SPX number. So saying all that, if you have this, so this is where we're going. And this is uptrend line, a back test of the uptrend line around 2077. I mentioned that yesterday is important. Again, this looks like somewhat of a constructive pattern for now, where you will get this V-shaped bounce. We will, in my opinion, certainly hit a major roadblock here, but I've been wrong before, as in the strength of the markets to rise, so I'll leave it to the markets. In the meantime, this zone, I think, will get covered, so you have little room here to move up maybe 100 Dow points or so going into the Fed meeting and possibly by tomorrow. Let's see what happens. Now, again, applying the internals, which are very important to see. As I like to say, externals are just prices. Patterns and stuff manifest themselves in the form of price patterns. Let's look at the internals. On the STOs, we went down to minus 600. That's definitely a buying point. Okay. Now the minus 600 was reached, and this is the interesting part. Okay, and that's known as a positive divergence. The minus 600 was reached actually on Monday. Or I would say, between Sunday and Monday night. And the markets were at 2080. So listen to this carefully. It's very simple stuff. Okay, even a kid could understand. We hit lower lows yesterday at 2055, roughly 150 points or so below the Monday mark. And guess what? The internals kept on improving. That's known as a positive divergence. I cannot make it any more simpler. End of story. That's a positive divergence. What it's telling you that shorts were covering and smart money was accumulating at these levels. I have trade alerts out there on the long sides, limited long sides since yesterday, S&P calls and such, and those are already working very nicely, even worked very well yesterday, 60-70% intraday. Few left on overnight. The Russells I recommended. And so those all will pay the bills as we open the market today. Futures are up 3. Remember, futures mean nothing at this point because what you have to focus on are these things that I'm showing you. Futures could be down 3 or up 4. It doesn't matter. What happens after 2 o'clock is really what determines what's going to happen. So these things have to be kept in mind. And here's a trade management thing here. Okay, from a trade management standpoint, let's take a picture of Tesla, for example. All right. I give Tesla here on Tuesday. The stock one goes berserk and runs up to within seconds, or not seconds, within minutes, basically goes up 3, 4, 5, 6 points. This has happened repeatedly. Tesla's floor is somewhere in this 215 level. So if you're an active trader or even a non-active trader and you see your options go from 4 to 7 or so within seconds, what do? Just sit there? You take your profits. I don't need to tell you that. Remember, my service is designed for people who manage their own books. I'm not here to control your books. I will not give you exact, and it's not physically possible, okay, to exact price points where you got price points I'll give you where the sell zones are, buy zones are. My charts show that. I draw them out as cleanly as possible, but I'm not going to tweet out every 5 minutes just because it hit my target point for active traders in 10 minutes. All right, just remember that. That's just the way it is, and it actually benefits you. You don't have to wait around for me to tell you, okay, sell Twitter because you're up 60% on your calls. You do it yourself. So these type of moves that we have consecutively worked on Monday, stock opened, I issued the buy alert, the stock went from 219 and hit 226. I mean, these are fantastic moves. Buy a few calls, whatever you need to do, and you make yourself a nice, decent money. Leave for the day. I don't know. If you met your allocation for the day or your quota, then don't blow it. Same thing happened here on Tuesday. Market opened, stock ran up. Okay, reversal tail. Now I use very tactical charts, so can you. You put this Darvas box on your Thinkorswim chart, you can see where things are going. Now this is where we are right now. Stock's up about $1.55, and we are we'll see what happens. It is still a downward sloping pattern. I'm not going to get into technicals right now because I have ample charts out there showing that, and you just have to scroll back and find them and look at them. Okay, so what I'm getting at is on fast moving momentum stocks, don't wait around for me to tweet out, okay? Because I got to do my own trading book too, and this is not ditto trading where you're mimicking every one of my trades. I am basically my mission statement is simple. I am primarily a tactical financial education site. I teach how to read charts. I put some very tactical charts out there, trade alerts and such, and you become a better person and a better trader and enhance your portfolio and hopefully make a lot of money. Thank you for listening. This is Clueless 8 Trading Frank.